We are back. The S&P topping 7,800 for the very first time today as earnings continue to impress. I know they impress our next guest. He's the Wharton School Professor of Finance, Wisdom Tree's Chief Economist, Jeremy Siegel. Professor, welcome back. I did describe that correctly, right? I mean, you continue to be blown away by the earnings momentum, yeah?
Yeah, I'm blown away by the earnings momentum and continuing good news. You know, last Friday when we were on, we talked about, the situational awareness. What would you call it? Not a meltdown, a liquidity event. And it really didn't rock the market. That was a clearing event. And I think that gave confidence to people. Well, there's some leverage built in there, but it's not excessive. And then the CPI and the PPI report today, this week, are actually quite good. Goldman Sachs, which is the best at looking at all the details on how that affects the PCE deflator that comes out later in the month, lowered their estimate of what the PCE is going to be, both for the CPI and the PPI. Said it's going to go up only 0.2%, and half of that, 1/10 of that percent, is that crazy portfolio management a section of the price index that is mostly due to the rise of the stock market. Certainly not a bad thing. So, I mean, what we got this week in terms of real data. Now we do get, of course, retail sales tomorrow, but certainly on the price, I have a feeling if oil certainly stays in that low 80s, I don't see any way that Warsh is going to raise in September, and the earnings parade continues.
Yeah, it seems like we can scratch out the hike for September. I asked the question at the very top of the program, Professor, and I'd like your answer to it as well, whether investors are simply too bullish. For a variety of reasons, they're justified to be bullish, but some would say, well, could have an earnings bubble, maybe this is the peak of it, and other reasons as well. Or are we not bullish enough because we actually have more staying power in the earnings story than we think, along with some other issues like inflation coming down and then the Fed eventually cutting interest rates, not raising them?
And productivity, which, as you know, it has lagged the first 2 quarters of this year, but it looks like it might really pick up in this third and fourth quarter. I mean, AI really beginning to come in, and AI not just causing the earnings to go up because of the hyperscalers and all the spending on the infrastructure, but again, as we've talked about so many times, firms using it to reduce their own expenses, to increase the margins, which have been, pretty stagnant for the non-tech group. If you take a look historically. Now, certainly overall, and as you commented at the beginning of the program, I mean, margins overall on the S&P are at all-time highs. But if you take out the tech communication, they've been relatively stable. But they can improve dramatically if they can use, what AI is designed for, and that is to reduce costs. So there's, I think, where, the story can continue despite whatever happens to that AI. I'm not going to, whether it gets slightly overbuilt, what kind of competition. Boy, it seems, doesn't the token decline, the stories seem to be overwhelmed always by the results and the earnings. I do not think it's inappropriately bullish at this point.
Well, what do you like the most in the market right now? What looks most attractive to you if you were just judging the market on a, price to earnings ratio, a sector, something you think is unloved, what we're not focusing on enough because tech, deservedly so, is sucking all the oxygen out of the room, and maybe that's your pick. You tell me.
Well, there is a rotation that has taken place over the last 6 months from what we call growth stocks to value stocks. And I think on the day that we had that liquidity event, some people call the Leopold low, after Leopold Aschenbrenner, when he had to sell out much of his position. I mean, that was an extreme, shock on that. Now, we have really bounced back from that. But if you take a look at the broader trend, that rotation is still taking place. It doesn't mean that, that the mag 7, the hyperscalers, and tech are going to falter. But as I say, when I look forward to potentially has the gains that aren't counted for on the future, I like the 15 PE stocks that potentially have gains from AI. And there's many companies, Anthropic is one of them, that's listed almost every industry and how much potential gain it could have from AI, and yet has not used it yet. And, I'm not going to say specific names or not, but I think that is in the future that can continue that rotation. And both, by the way, both can still go up, but you could have, as we see, some of those ignored value stocks rise relative to, the winners of the last 2 or 3 years.